Hey everyone, welcome back to Corporate Decoder, the place where we unravel the hidden stories behind the business world. And let me tell you, this latest report from Nuveen Investment Trust de SEC has some interesting nuggets, especially if you like keeping track of your money's performance. We're diving into their annual shareholder reports, and while it might sound dry, there is a story here about how different classes of shares perform and what costs come with them. We'll break down the numbers so you can see what really matters. And hey, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we can chat more about these filings. So let's talk about the costs, because nobody likes spending more than they have to for a hypothetical $10,000 investment. The costs can really add up or stay surprisingly low depending on the share class. For example, Nuveen Dividend Growth Fund class, shares only cost investors about $95 or 0.91%. That is pretty reasonable. But slide over to Class C shares and that same $10,000 investment will cost you $170. $3 or 1.66%. That extra bit adds up, especially if you are investing a lot or for a long time. Then you see Class R6 shares, which are much cheaper, costing $64 or 0.61%, and Class I shares come in at $69 or 0.66%. It really shows how choosing the right share class can make a big difference in your pocket. Now, let's get to the juicy part: performance. This is where you see where all those costs are actually going. The Nuveen Dividend Growth Fund class of shares returned 9.43%. Not bad, but they significantly underperformed the S&P 500 index, which jumped 16.33%. The report points to a few reasons for this. They were overweight Broadcom Incorporated and had good security selection in consumer staples like Philip Morris International Incorporated and Walmart Incorporated, and they were also overweight Amphenol Corporation. However, they missed out on Nvidia Corporation entirely, which was a big detractor. They also had some security selection issues in the healthcare sector, with overweights to Elevance Health Incorporated, United Health Group Incorporated, and Zoetis Incorporated, and an out-of-benchmark position in Novo Nordisk AS. Communication services also took a hit, with an underweight to Meta Platforms Incorporated and an overweight to Comcast Corporation, plus an overweight to Accenture plc. It is a mixed bag, showing how picking the right stocks and having exposure to the right sectors is key. And sometimes just not owning the biggest winners can really hurt relative performance. Looking at the long-term picture, we see how these funds have done over a decade. For class of shares at net asset value, excluding sales charges, they achieved a 9.43% return over 1 year, 12.66% over 5 years, and a solid 10.87% over 10 years. However, when you look at the S&P 500 index, it trounced them with 16.33% over 1 year, 15.88% over 5 years, and 13.66% over 10 years. The Lipper Equity Income Fund's classification average performed a bit better than the Nuveen Dividend Growth Fund at 8.65% for 1 year, 12.37% for 5 years, and 9.33% for 10 years, but still lagged behind the S&P 500. This really highlights that while the Nuveen Dividend Growth Fund has delivered decent returns, investors might have been better off in a broad market index. Let us get down to some key figures showing the size and activity of the fund. As of the 31st of July 2025, the Nuveen Dividend Growth Fund has a grand total of $6,340,000, $3,432,390, $6 in net assets, which is quite a bit of money. They hold 45 different investments in their portfolio, and their portfolio turnover rate is just 12%, meaning they are not actively trading in and out of positions very often. The total management fees paid for the year were a hefty $37,319,585. That is a significant amount of money being paid out to manage the fund. Moving on to the Nuveen Global Dividend Growth Fund, class of shares saw a return of 7.33% for the year. Again, this significantly underperformed the MSCI World Net Index, which returned 15.72%. Top contributors to their performance included security selection in information technology, with an overweight to Broadcom Incorporated and an out-of-benchmark position in Taiwan Semiconductor Manufacturing Company Limited. They were also overweight JP Morgan Chase and Company and Philip Morris International Incorporated. On the flip side, detractors included security selection and an overweight in healthcare, with investments in Novo Nordisk AS, United Health Group Incorporated, and Zoetis Incorporated. They also missed out on Nvidia Corporation and had security selection issues in communication services. It seems like a common theme of missing the biggest market movers is emerging. Over the last decade, the global dividend growth fund class of shares at net asset value, excluding sales charges, returned 7.33% for the year, 10.33% over 5 years, and 7.80% over 10 years. The MSCI World Index Net, however, delivered 15.72% for the year, 13.78% over 5 years, and 10.6% over 10 years. The Lipper Global Equity Income Funds classification average is closer, but still trails the MSCI World Index at 12.68% for the year, 10.86% for 5 years, and 7.06% for 10 years. This fund is definitely facing an uphill battle against its benchmark and even its peer group average. Now let's look at the Nuveen International Dividend Growth Fund. Class of shares, this fund returned a rather disappointing 4.04% for the year. This significantly underperformed the MSCI EAFE Index Net, which returned 12.77%. Their performance highlights included security selection in information technology with an overweight to SAPE and an out-of-benchmark position in Taiwan Semiconductor Manufacturing Company. But they also had an underweight to ASML Holding NV. Detractors were in the financial sector with an underweight, including an overweight to Oryx Corporation, and in healthcare with overweights to Novo Nordisk, ACE, and Sanofi SAR. They also had an underweight in industrials. It is clear that navigating international markets has been tough for this fund. Looking at the 10-year performance for the International Dividend Growth Fund, class of shares at NAV, excluding sales charges, they managed 4.04% for the year, 7.51% over 5 years, and 4.44% over 10 years. The MSCI EAFE Index Net far outpaced them with 12.77% for the year, 10.34% over 5 years, and 6.14% over 10 years. Even the Lipper International Equity Income Funds classification average did better at 13.29%, 10.09%, and 5.80% respectively. This fund seems to be struggling significantly to keep pace. Shifting gears to the Nuveen Winslow Large Cap Growth ESG Fund, class of shares returned a strong 18.28% for the year. This sounds great, but it significantly underperformed the Russell 1000 Growth Index, which returned a whopping 23.75%. Top contributors were security selection in industrials with overweights to Howmet Aerospace Incorporated and Vertiv Holdings Company, an underweight to Apple Incorporated, and an overweight position in Spotify Technology, SA. However, detractors included security selection and an underweight in information technology with an out-of-benchmark position in ASML Holding NV, which they sold. They also had an underweight to Meta Platforms Incorporated and an underweight in consumer discretionary like Tesla Incorporated. This fund is showing growth, but it is not capturing the full upside of its benchmark, especially in key growth sectors. Over the past decade, the Nuveen Winslow Large Cap Growth ESG Fund class, a shares at NAV excluding sales charges, had an 18.28% return for 1 year, a very strong 15.10% over 5 years, and an impressive 15.40% over 10 years. This is much closer to its benchmarks. The Russell 1000 Index returned 16.54%, 15.49%, and 13.38% across those periods, while the Russell 1000 Growth Index absolutely crushed it with 23.75%, 17.27%, and 17.06%. The Lipper Large Cap Growth Funds classification average also performed very well at 21.58%, 14.58%, 14.58%. Even though this fund is growing, it is quite clear that it is not keeping pace with the outright high, flying growth stocks. Let's peek at where the money is actually going, specifically looking at the Nuveen Dividend Growth Fund. Among their long-term investments totaling over $6 billion, we see big names like JPMorgan Chase Civ Company, Eaton Corp plc, and Honeywell International Incorporated. In the financial services sector alone, they hold significant positions in American Express Company, Ares Management Corporation Class A, MasterCard Incorporated Class A, and SIB Global Incorporated, totaling over $640 million. They are heavily invested in semiconductors, and semiconductor equipment with Broadcom Incorporated at nearly $343 million and Taiwan Semiconductor Manufacturing Company, Limited sponsored ADR at over $184 million. Technology, hardware, and equipment is also a major focus with Amphenol Corporation Class A, Apple Incorporated, and Motorola Solutions Incorporated. This shows a clear focus on large-cap, established companies, particularly in technology and financial services. Now, let's check out the Nuveen Global Dividend Growth Fund's portfolio. Their total investments are around $18 million. Notably, they have holdings in Australia, Canada, Denmark, France, Germany, Hong Kong, Ireland, Japan, Switzerland, Taiwan, the United Kingdom, and the United States. In the United States, their top holdings include Broadcom Incorporated and Apple Incorporated, similar to the Dividend Growth Fund. They also have significant exposure to Philip Morris International Incorporated and JP Morgan Chase DI Company. This global diversification is evident, but the US holdings still appear to be a substantial part of the strategy. For the Nuveen International Dividend Growth Fund, with total investments around $5.4 million, the top country exposures are Canada, France, Japan, and the United Kingdom. In Canada, they hold Enbridge Incorporated and Royal Bank of Canada. France shows holdings in Accor SA and Accession, while Japan includes Itochu Corporation and KDDI Corporation. The United Kingdom has BuyE Systems plc and Unilever plc. This fund's international focus is clear, but the smaller asset base and more concentrated country holdings suggest a different strategy than the larger funds. Finally, let's look at the Nuveen Winslow Large Cap Growth ESG Fund. With net assets around $902 million, their common stock investments are heavily weighted towards software and services, featuring Microsoft Corporation, Cadence Design Systems Incorporated, and Intuit Incorporated. They're also heavily invested in semiconductors and semiconductor equipment with Nvidia Corporation, Broadcom Incorporated, and Lam Research Corporation. Technology hardware and equipment includes Apple Incorporated. Their ESG focus might be influencing some of the selections, but they are definitely leaning into the high-growth tech sector, which, as we saw earlier, has had a mixed performance this past year. Looking at the overall financial health and structure of these funds, the Nuveen Dividend Growth Fund stands out with over $6.3 billion in net assets. Its class of shares are the largest segment, representing over $1 billion in net assets, followed by Class I with over $2.5 billion, and Class R6 also with over $2.5 billion. Class C shares are the smallest at around $159 million. This breakdown shows where most of the investors' money is. Now for the statement of operations, which shows how the funds make and spend money. For the Nuveen Dividend Growth Fund, investment income was over $114 million, but expenses were over $45 million. The net investment income was around $69 million. The big story here is the realized and unrealized gain or loss. They had a massive net realized gain of over $592 million, but this was offset by a net change in unrealized depreciation of over $77 million. Overall, a really significant increase in net assets from operations of over $585 million. The statement of changes in net assets is where you see the overall movement of money in and out of the funds. For the Nuveen Dividend Growth Fund, after all the gains and losses, they had a net decrease of about $8.8 million in net assets. This might seem odd after the huge gains, but it is because of substantial redemptions, meaning investors pulled out a massive $1.17 billion. Even with the investment gains, those redemptions significantly reduced the fund's total net assets. This section is important for tax purposes, detailing how distributions are taxed. For the Nuveen Dividend Growth Fund, their long-term capital gains distributions were a substantial $370. $2 million for qualified dividends, they had 100% eligible, which is great for individual investors. However, their foreign source income and taxes paid were zero, and their 163J interest dividends were only 3.3%. This indicates a strong domestic focus for this fund. The Nuveen International Dividend Growth Fund, though, had some foreign source income and taxes paid, showing a different investment profile. Let S zoom in on the Nuveen Dividend Growth Fund. S financial ratios, focusing on class of shares. Their total return was 9.43%, with net assets at the end of the period at $1.16 billion. The gross expenses were 0.91%, and net expenses were 0.90%. The net investment income was 0.90%, and portfolio turnover rate was 12%. This all paints a picture of a relatively stable fund with moderate expenses and a buy and hold strategy. Comparing that to Class C shares, the total return was lower at 8.61%, and importantly, the net expenses were significantly higher at 1.66%. That higher cost eats into returns, as you can see. Looking at the Nuveen Winslow Large Cap Growth ESG Fund, class of shares, they saw a 17.39% return. Although this underperformed the Russell 1000 Growth Index at 23.75%, it is still a strong return. Their expenses were 1.65% for Class C shares, which is also on the higher side, impacting their overall return. However, for Class R6 shares, the expenses were a much more attractive 0.54%, and for Class I shares, it was 0.65%. This clearly demonstrates how the share class you choose can drastically alter your net return, with R6 and I shares being significantly more efficient. When we look at the overall statement of assets and liabilities, it is clear the Dividend Growth Fund is the giant here, with over $6.3 billion in total assets. The Winslow Large Cap Growth ESG Fund is also substantial with over $900 million in assets. The global and international dividend growth funds are considerably smaller, with assets in the tens and millions respectively. This shows scale really matters in the investment world, and larger funds often have more resources and potentially better economies of scale. Now, let's talk about something really important for long-term investors, the reason behind the advisory fees. Nuveen's board of trustees reviewed and renewed the investment management and sub-advisory agreements. They considered the nature, extent, and quality of services provided, looking closely at fund performance compared to benchmarks and peer groups. For the Dividend Growth Fund, even though it lagged its benchmark, it ranked well within its peer group for 1 and 5 year periods. The Global Dividend Growth Fund also ranked well within its peer group, despite underperforming its benchmark. The International Dividend Growth Fund had mixed results, outperforming its benchmark in some periods, but ranking lower within its peer group over longer terms. The Winslow Large Cap Growth ESG Fund showed strong performance, but still fell short of its aggressive growth benchmark, though it ranked well within its peer group. They also scrutinized fees and expenses, comparing them to industry peers and considering economies of scale. Overall, the board found the fees to be reasonable given the services and performance, a critical step in ensuring investor money is being managed effectively. So, what is the big picture here? Nuveen is managing a diverse range of funds, and the performance stories really vary. While some funds like the Dividend Growth and Global Dividend Growth show decent long-term returns, they consistently struggling to keep pace with broader market benchmarks like the S&P 500 or MSCI World Index. This is a trend to watch, as investors might be leaving returns on the table by not investing in those benchmarks directly or in funds that more closely track them. The Winslow Large Cap Growth ESG Fund, on the other hand, is showing stronger growth. But even it is not quite capturing the full upside of its growth index, highlighting the difficulty of consistently beating the market, especially in high growth sectors. The cost structure of different share classes also remains a critical factor, with Class A and C shares carrying higher expenses that can significantly erode returns, while R6 and I shares offer a more efficient way to invest. A key takeaway is that while the company is diligently reviewing advisory fees and services, the actual investment performance for some of these funds against their benchmarks is a concern. For investors, this highlights the importance of not just looking at past performance, but also understanding the costs and comparing funds against relevant benchmarks and peer groups, and of course, being mindful of the share class you choose. Alright, that is our breakdown of Nuveen Investment Trust DES latest filings. What is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.